Welcome to this explainer. Look, government tax policy usually gives people a massive headache, right? If you've ever tried reading a government budget, you know it can feel like a completely foreign language. But today, we're diving into Nepal's Finance Bill 2083, and my goal is to translate all that dense, bureaucratic text into clear, actionable financial takeaways. Whether you're an everyday earner, a small business owner, or an investor, there are massive changes in this bill that you absolutely need to know about. So let's jump right in.
Here's our roadmap for today. We're going to hit 1. Major taxes and income rates. 2. Personal and business tax amnesty. 3. VAT and company renewal. 4. Agriculture and special concessions. And finally, 5. Revenue leakage control. Let's get to it.
Now, this is the actual document we're breaking down today. It's the official one-pager government tax summary for fiscal year 2083. And yeah, it is incredibly dense, literally packed end-to-end with legal codes, percentages, and deadlines. It's a lot to process, but that's exactly why we're here. We're going to distill this whole shebang into super easy-to-understand concepts. Okay, starting off with Section 1, Major Taxes and Income Rates, basically the new baselines for everyday earners.
10 lakh rupees. Remember this number, because it's the magic number for personal finance this year. The government just set the new first tax slab for personal income tax right at 10 lakh rupees. If you're planning your finances or calculating your tax liabilities for the year, this is absolutely crucial. This is your new baseline, folks. It really sets the foundation for how much you'll take home versus how much goes to the state.
And check this out, a massive drop. The maximum tax rate, it's been slashed from 39% all the way down to 29%. I mean, that is a huge 10% reduction at the highest earning tier. This is a major shift in policy, giving a ton of relief to high earners, and honestly, it's likely designed to incentivize keeping more wealth circulating in the formal economy. It's a real game changer of a headline figure that changes the math completely.
So, moving beyond personal income, we've got some vital systemic changes for businesses and investors too. First up, much-needed reforms in Section 57. You probably know it as DAFA 57. This has historically been a massive headache for corporate ownership changes, so fixing this definitely signals a push for a much friendlier business environment. And second, investors, listen up. Capital gains tax on share sales is now finalized as the ultimate tax withholding under Section 92, meaning once you pay that CGT on your stock market gains, you are completely done. It simplifies the tax burden incredibly.
Moving on to Section 2, Personal and Business Tax Amnesty, cleaning the slate for taxpayers. So, the government is essentially offering a massive clean slate opportunity. This is a pretty rare chance to fix past filing mistakes without getting totally crushed by penalties. Just look at the contrast. The old way was, well, terrifying for non-filers. If you missed a filing, you were hit with compounding taxes, heavy late fees, and massive interest that just snowballed out of control. It kept so many people hiding outside the system. But this new 2083 provision totally changes the game. If you have a PAN and haven't filed, you can now file your returns up to fiscal year 2081/82, pay the base tax you owe, and boom, all those crazy fees and interest are completely waived, just automatically wiped out once that base payment hits.
And honestly, it gets even more forgiving. We're talking about an unprecedented exemption for folks who earned income in the past but never even registered for a PAN. If you step into the light now and file returns just for the window of fiscal year 2079/OK through 2081/082, any taxes, fees, and interest from the years prior to that are 100% forgiven. The government's basically saying, just get into the system now, and we won't punish you for the distant past.
Now, how are they handling general tax arrears? The standard nightmare of endless compounding penalties is gone. It's replaced by the highly simplified 2038 arrears clearance. It works like this. You just pay your core outstanding tax amount plus a tiny 1% extra fee. That's literally it. That 1% completely wipes out all remaining interest and penalties. It is a huge incentive to finally clear your books. Oh, and there's a highly specific, time-sensitive provision for Nepali citizens working for international agencies, UN missions, or INGOs. If that's you, listen closely. You only have until the end of Monksur to pay that 1% extra fee to waive all your remaining taxes and fees. Definitely mark that deadline on your calendar because that window is super tight. All right, Section 3, VAT and company renewal. This is all about easing corporate compliance and operations. So these amnesties aren't just for income tax. They actually reach deep into the day-to-day operational side of running a business. You know that awesome core tax plus 1% rule we just talked about? Well, it applies here too. If your business has passed VAT and excise duty arrears, you can clear them out by paying the core tax plus that 1% fee. You've got until the end of Poush 2083 to do this and wave goodbye to all those penalties. Plus, fun fact from the document, there's even a specific nod to a waiver on remaining VAT related to milk. So, very targeted relief right there.
There are also some super practical niche waivers to look at. Like if you sell jewelry, the luxury tax on uncollected jewelry from before Cardic 2 2082 is completely waived. And get this, you don't even need to submit the details to claim it. Also, if you're a manufacturer dealing with unusable or expired industrial raw materials, you finally have a clear path forward. You can officially destroy those goods in front of witnesses and legally deduct them from your ledgers. Huge operational headache? Solved.
And if you're sitting on a dormant or unrenewed company, the government is basically throwing you a lifeline here. By the end of Asoj 2083, you've got two choices. You can either catch up on your renewals by filing up to FY 2081/82 to get rid of the late penalties, or if the business is officially dead, you can apply for closure without facing those massive fines. So no more zombie companies draining your peace of mind. Moving right along to Section 4, Agriculture and Special Concessions. We're looking at targeted sector incentives here.
These exemptions are really interesting because they show us exactly where the government's priorities lie. For example, disability aids. There's now a 100% customs waiver on raw materials used to make artificial limbs. That's just a fantastic social initiative. Then for homeowners, there's a new residential insurance deduction where you can deduct up to 10,000 rupees from your income tax for your premiums. Also, if the government acquires your land for development, your compensation is entirely exempt from capital gains tax. But the absolute biggest one on this list? Agriculture processing. The bill is offering a massive 10-year income tax holiday for agriculture processing industries, plus VAT-free imports for cold storage equipment. I mean, that is a huge incentive to build up Nepal's agricultural infrastructure.
Finally, Section 5, Revenue Leakage Control. This is the administrative trade-off.
Now, you might be sitting there wondering, with all these amnesties and 10-year tax holidays, what's the catch, right? What is the government doing on their end to ensure compliance in exchange for being so forgiving? Well, the answer is strict enforcement. The state is really tightening its surveillance moving forward. They're rolling out technology-based monitoring to control border smuggling. We're also going to see a lot more joint market monitoring to make sure businesses are actually playing by the rules. Plus, they're expanding their advanced digital information exchange with international customs. Basically, the grace period is happening right now because they are tightening the digital net to stop future revenue leakage.
Okay, as we wrap up this explainer, I want to leave you with a highly actionable summary. These are the critical deadlines you absolutely cannot miss if you want to use these amnesties. By the end of Mungsir, UN and INGO workers got to clear their taxes under the new rule. By the end of Poush 2083, the window closes for the PAN and tax return amnesties, along with the 1% VAT and excise clearances. And finally, by the end of Asoj 2083, you have to decide whether to renew or officially close those dormant companies. Seriously, take a mental snapshot of these deadlines right now. They could save you a ton of money.
Which brings us to our final thought. The Finance Bill 2083 is essentially offering an unprecedented get-out-of-jail-free card for past mistakes, but it's paired with the promise of a high-tech crackdown on future tax evasion. So the big question we have to ask ourselves is, will these broad amnesties and stricter border controls actually formalize the economy in the long run? We'll bring everyone out of the shadows today, create a much stronger, more compliant financial ecosystem tomorrow. I'll leave you to ponder that one. Thanks so much for joining me on this explainer, and keep learning.